Hey everybody, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, investing, and how to make money work hard for you. Take a moment to look at all my videos, and if you like what I'm doing, please give a thumbs up and consider subscribing. All right, today we're going to talk about the stock market and the whole stock market correction we're having right now. The stock market has fallen roughly 5,000 points from its 52-week highs. You see on the screen right here, 52-week high was about 29,500. 52-week low was about last week. It hit 24,600. So that's nearly 5,000 points drop, and we're currently in negative numbers as far as 2020 goes. And so on Friday, the stock market is trying to inch its way back. It closed at least the Dow Jones closed at 25,800. And so we all know what's going on right now. It's the biggest news everywhere. So it's the global spread of this CV. We're going to use CV. We're not going to use the full word because it's getting demonetized by the YouTube algorithm. So we're going to say CV. And I think you all know what we're talking about. So take a look at this. The Dow tanks 257 points. S&P 500 nearly erases the weekly gains as the CV risk drags stocks lower. CV is scaring company insiders into selling their stocks fast. So yeah, everybody's freaking out. The stock market is going crazy. Everybody's getting afraid. And when people are afraid, they tend to do stupid things. You're letting your emotions take control. And that's never a good idea, to let your emotions take control when you're dealing with business, when you're dealing with money. Emotions have nothing to do in the money world, in the finance world. So you got to separate your emotions and just look at the statistics, look at the numbers. And so let me show you this chart right here. So since 2009, the stock market has grown to 431%. So look at all these reasons why there's people saying, oh, you should get out of the stock market. You should sell everything you have because things are looking bad. So look at all the times that things have looked bad. Look, there's since 2009, there's Chrysler, GM files for bankruptcy. There's the BP oil spill. There's earthquakes. There's government shutdowns. There's Ebola virus. In 2018, the end of 2018, the S&P fell dramatically, and everybody was freaking out, and everybody was selling off their stocks. But look, the stock market has been consistently going up and to the right. So it's been growing regardless of anything that happens. There's always these types of corrections. Even after the corrections and even after a complete recession, overall, if you look at the big picture, the stock market always comes back. And so there's no reason to believe that this is not the case this time. So up on the screen now is a shot of my public portfolio that I share with everybody. And so I am currently down nearly 13% on this portfolio, down about $1,000 on this portfolio. The only thing that's kind of holding it together, I jumped in on Tesla stock when it dropped to $635 last week. And so that has a 10% gain. But if it wasn't for that Tesla stock, my portfolio would be even lower. So let's talk about some of my biggest holdings in this portfolio. It'll be Carnival Cruise Lines, CCL, and you'll see Carnival Cruise Line on here. It is down 14.90%. So I have about 59 shares or close to 60 shares of Carnival Cruise Lines. That's roughly $1,900 that I put in at my cost basis of $31.90. And it's just been dropping and dropping. And I am continuing to buy this stock. If it keeps on dropping, it gets more and more attractive to me. And so there's no reason for me to not buy it at this price. If I bought it at $30 and $40, I'm definitely going to buy it at $28 and $27. My cost basis right now is $31.90. And that's one of the things is if you buy it at a higher price and it goes down, there's no reason not to buy it at the even lower price because it's even cheaper than what you bought it before. So you see the headlines here. Cruise giant Carnival has seen its market value plunge by nearly 50% since the CV outbreak started. And yeah, this stock, I looked through the history. The last time it was down to this price at $27.87. We have to go back to 2013. 2013, it was around $28. And so now at the current prices, this dividend is starting to look really, really attractive. That's 6.28% dividend on this CCL stock. And so you see, like I said, I picked up more shares. I picked up 10 shares at $30. I picked up another 28 shares at $28. So I dropped almost $1,100 on CCL in the past few days. And I also picked up additional shares of Revolve. Revolve is starting to look even more attractive at these lower prices. I'll link the video where I talk about Revolve in the description below. But I picked up another 19 shares of Revolve at $14.45. And also I picked up two new companies at these prices, because these prices are just starting to look too good not to pick up these prices. And one of them is a big one. It's of course Disney. Look at Disney here. I picked up 4 shares of Disney at $113.72. It's a small position, but if the prices keep on dropping, I have to pick up more shares. So that's what I like to do. You know, I don't want to start off with picking up a whole bunch of shares, because if the price is dropping and the trend is that the market is falling, I'm going to pick up a little bit of shares. If the market falls some more, I'm going to pick up a little bit more, and I'll just ride that wave down. That way you get a lower cost basis. You don't want to put all your eggs in one basket at the very beginning. That way, if the stock market keeps on crashing, keeps on going down, you're not going to get that lower price. So it's better to spread out your money, get in on a company that you think is going to do good. And of course, Disney, everybody knows Disney. And you know, Disney is a big travel. They have a small cruise industry. Of course, they make movies, and they're a tourist attraction. Of course, they're theme parks. So obviously, with the whole CV situation, all tourism is down, and that's why you're seeing a huge hit to Disney stock. The other one that I picked up, and I'm going to try to build a position on, is Nvidia. And so we're going to talk about Nvidia and Disney in a few minutes. But for Nvidia, I picked up 4 shares of Nvidia at $263. So let's look at this chart of Disney. So Disney is down. Look at that chart. It's just a nosedive down to $113 at close. And so here is my thinking about Disney. So Disney just released their Disney Plus at the end of 2019. And so you'll see this stock in November of 2019. That is just before they released Disney Plus. And then you see that jump that is into December and January of 2020. And that jump is because of Disney Plus. So Disney Plus, how many subscribers do they have? 28.6 million subscribers. And at what cost? So it's $6.99 per month for Disney Plus. If you just get Disney Plus, if you combine it with ESPN and Hulu, it's $12.99 a month. So let's do a quick calculation right here. So $6.99 times 12 months, that's $83.88 per year. And we'll times that by 28,600,000. Let's see, there are 28,600,000 subscribers. That is $2.39 billion. So that's $2.39 billion in additional revenue that they did not have before November 19th, 2019. And so that's why Disney stock, if you look at the chart, jumped exactly in November of 2019 into December and January of 2020. But now it took a nosedive because of the CV situation. You know, if you're going to go to Disney, you're going to go to Disney. There's not going to be anybody that says, oh, we're never going to go to Disney ever again because of this whole situation. If you don't go to Disney this month, you'll probably go in 3 months or 6 months. If you had plans to go to Disney, it's not like you're going to say, I'm never going to go to Disney. I'm never going to go to their parks again. When this whole thing rolls over, that money that Disney was going to make off of you, they're going to make off of you in the future. So that's my thinking about Disney. You know, it's a huge company. I don't think Disney is going to go anywhere. Like I said, they're going to make their money back. So the market right now is freaking out. It's not even considering that $2.39 billion of additional revenue that Disney Plus brings to the company because their stock price is currently trading below what it was in November 2019. So before Disney Plus came out. So essentially the market is saying Disney Plus has zero value right now. And that's just obviously not true. Disney Plus is huge, as 28.6 million subscribers. And that's just in the last few months that it's been available. All right, so Nvidia. So if you're a gamer, of course you know Nvidia. If you're into PCs and computers, you know what Nvidia is. They're one of the biggest players in computer graphics. They make high-end computer graphics chips, and so they're number one in the gaming video graphics market. So you see on the screen right here, their gaming had a record year, 36% growth from 2017 to 2018, and 2018 to 2019, 13% growth. So their gaming video cards are the best out there. But that's not why I'm interested in Nvidia. I'm interested in Nvidia because of their AI and their artificial intelligence and what they're doing with autonomous driving. If there's anybody out there that does not think autonomous driving, self-driving vehicles are on its way, you just have to get your head out of the sand. Definitely the self-driving market is going to come. If it's going to come in next year or 2 years or 5 years, that's up for debate. But I think for sure within the next 7 to 10 years, self-driving is going to be here. And the companies that are embracing self-driving, they're going to be number one in the market. So obviously the leader, and again, this is also debatable, but the fact just is that Tesla is the leader in self-driving. I have another video where I do discuss about Tesla and their self-driving. I'll link that video in the description below. But so in self-driving department, as far as the chip, the computer, that makes the car able to drive by itself, to do all the processing from the cameras. There's only two manufacturers worth talking about. One of them is obviously Tesla. Tesla has made their own computer chip to do their self-driving, and then everybody else really relies on Nvidia's chip. So it's kind of like Intel. Intel is the king of the processor, the CPU. So even if you have an Apple computer or a PC or any computer out there, everybody's going to use an Intel chip. So they are the CPU king. So there's not really anybody that can compete with Intel in the CPU department. It's not like a startup is going to start making CPUs. Intel has that on lockdown. And so that's what's happening with the self-driving. So Tesla has it locked down on their self-driving by producing their own chip. And it's been reported that their chip is at least 7 years ahead of anybody else. But when the time comes, it's not only going to be Tesla. Every single company is going to have an autonomous car. Ford, GM, Toyota, Honda, Volvo, BMW, all these manufacturers, they're not capable of making a chip, a computer, to do their autonomous driving. They're going to have to outsource that. They're automotive manufacturers. Tesla is different. See, Tesla is not an automotive manufacturer. They're actually more of a software and computer company that also happens to make vehicles. But Ford, GM, all these other manufacturers, they know how to manufacture cars. They do not know how to manufacture chips and computers. So they're going to have to outsource that. And who are they going to outsource it to? It's going to be the number one player, and that's Nvidia. And you'll see here, so Nvidia is the only company that is delivering end-to-end open platform for building autonomous vehicles. And so that's why I'm so interested in Nvidia. The self-driving autonomous vehicle is going to come, and it's going to change the whole market. All right, guys, that's it for today. If you find any value, please give that thumbs up. It really helps the channel. Consider subscribing and check out all my other videos. Ring the bell icon and you'll get notifications of all my new videos. And I'll catch you in the next one. Peace.